And welcome to the show. It is March 4th, 2022. This is a weekend update for stock symbols MMAT and MMTLP. Let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. You may or may not be entertained by this video, but we'll see. Let me start by looking at the stock price. This is the stock price of MMAT, and as we can see, it's gone up a lot, but then it's fallen like a brick. What's going on? Oh my God, it's dropped to $1.47. That's a huge drop. I hope the other one's better. Man, oh, look at MMTLP. That's dropped as well too. We're down in the red. This is awful. Mass hysteria. Dogs and cats living together. Oh my God. Oh, wait. Remember I mentioned volatility? I think I made a video about it. I think this is the video. Let's see. Let's do a quick play of what I said. So he's gonna buy MMAT, and he's gonna wind up being long MMAT, and the price of MMAT is gonna keep going up. So we've got a situation where the price of MMAT goes up dramatically, and you'll just have these longs as the other shorts get liquidated. That's a nice scenario, but where are we now? Well, the dividend hasn't been announced yet. There's about 170,000 MMAT shareholders. And, I know this story, but the shorts are also pretty smart, and they know this story really well. In fact, they've been playing this out in their head probably for the last, 6 months to a year. And something tells me they don't want to be liquidated. And they'd probably like to avoid bankruptcy if possible. So what would you do if you were short, right? I mean, of course you probably would want to be liquidated, right? So if I were short, I might want to, get rid of, stop this whole process just by buying some MMTLP shares. That would stop it, right? Close your short position in MMTLP. But the problem of that is that, the price is $2 right now. If you start buying all the MMTLP shares, the price could rise substantially, and then that could cause people to buy. So you don't want to just buy MMTLP. You want the price to be low, and you want to liquidate your short position in MMTLP, which means you want people to sell. So by buying the MMTLP shares at a low price, you can reduce your liability. You can prevent bankruptcy. That's where you want to be headed. That would be ideal, right? But the problem is longs kind of know this story as well, and they don't want to sell. Well, what can you do? The standard thing that most shorts would do is they would try to increase volatility, right? And pick up the shares whenever possible. If they pick up the shares at $2 a share, hey, that's a positive, because they save themselves from having to shell out $65 a share, right? If they can pick it up at $3 a share, that's a positive. But they can't let the price get too high. They got to slam it back down when it does, so that way people will feel the urgency to sell. If you saw the price go to $3, some people might say, oh, I could have sold at $3. They're not thinking necessarily that, I should just wait a bit and sell at 65, because, the dividend hasn't been announced yet. There's enough uncertainty there that some people might sell. And so that's where we're at. I think the shorts plan right now is to increase volatility wherever possible, and they're going to pick up, whatever they can. Increase volatility wherever possible, pick up whatever they can. That's the plan. And if we look at this price, we can see that the volatility is pretty high. They slammed it pretty good with a large amount of volume all at the same time. Same thing over here, right? And it was done on the day after the earnings were announced in the after hours. It was a good timing on their part, right? So people were like, where are the earnings reports? Because the earnings reports were late. I mean, it was meant to be after hours, but for whatever reason, it got delayed. And so people were starting to get uncertain. So that was the best time for them to slam it. They had this kind of like prepared, right? And they did, they did a good job. They slammed it down pretty hard. And a lot of people probably lost a lot of hope. And but hopefully you knew what you owned, and you held on to what you you believe is worth it. So it's it's just the way it is. So that was the volatility thing. But why are they doing this? They're doing this because of this. The shorts are really, they need to get MMTLP shares because the price of oil has gone to $113 and above. It doesn't look like it's stopping. It could easily reach 120. It could keep going. Who knows where it could stop before it's over. Okay? And the problem is that way back when the price of oil was $30, they were looking at it and actually paying out something like $22 per share of dividend. Not very good for them, but maybe they could survive. Well, now the price went all the way up to here as of 2 weeks ago or so. Got to the 80s, 90s, 100s, and now it's gone even further. Now it's reached over $110 a barrel. I didn't expect that. That's the end of my chart. So for me, that means I got to make a new chart. I got to update this thing. It really went beyond my expectations here. If we look at the price of oil, we can see that it's around $115 per barrel, WTI crude, and Brent crude is $118 a barrel. That's pretty high up there. Got to make more columns. $113 a barrel. This is why things are happening. This is why volatility is high. As the price of oil goes up, expect them to get more desperate. Expect volatility to become worse. It's going to be worse until they go bankrupt, until the dividend is announced. Once that dividend is announced, then we'll see massive liquidation start to happen. So once a dividend is announced, you got 10 days. They got 10 days to come up with cash, and then probably an additional 3 days on that to prevent an FTD, right? They'll have a failure to deliver a dividend, and that's a cash that is either stock or something else, right? So if it's a stock swap, that means they'll have to buy a stock for every share of MMTLP that's worth $60-something, and that could drive the price of that stock up for all we know. It's just, it's bad. I mean, if you're short, it's bad. It's really bad. So anyway, time to update the chart. Here's the end result of what the chart's going to look like. I'm going to give you a quick update. You don't have to watch the whole video if you don't want to. You can see the end result. That's what the chart looks like. How do I get this chart? This is the formula. This is the column of the spreadsheet. I'll go over the column of the spreadsheet in detail. If you want to see what the spreadsheet looks like, you just have to look here. That's it, okay? Here's how the spreadsheet works, okay? We start with the price of oil. It's $100 a barrel. Let's just say. This is just one column, okay? We subtract the COGS cost, which is the cost to pump oil out of the ground. That's $30 a barrel. 100 minus 30 is equal to 70. The value of oil in the ground is at 12%, right? It's not, you're not going to get, 100 cents on the dollar because the oil's in the ground. You got to pump it out. It's, etc., right? So it's 12% of $70 is $8.40. Torchlight has a revenue interest of about 49%. So you're only going to get about half of that, right? That's $4.12. Okay, that drops you down there. Now, the total amount of oil that's in the ground, we're projecting is somewhere in the range of 3.2 billion barrels of oil. So 3.2 billion barrels times $4.12 results in about $13.17 billion. Okay, of which we subtract taxes and the underwriter's fee. Corporate tax is normally about 20% or so, but we're going to say it's 0% because this dividend might be done under what's called a non-taxable event, maybe a stock swap with a company that wants those assets. So if it's done in that way, it becomes non-taxable. So as a result, we only have to pay the underwriter's fee, right? And that's going to be that's going to drop the overall amount down to $11.85 billion. Okay, $11.85 billion. Now we divide that by 164 million shares, 165 million actually almost. And we come up, because that's the number of shares of MMTLP that exists, and we come up with $71.88 per share of value in the dividend. That's what the dividend should be valued at. We do that for various dollar prices for, various prices of oil ranging from $30 per barrel all the way up to $150 per barrel. Okay, and then at that point you get a dividend in terms of dollars per preferred share. Stick it into a chart, and that's what you get. That's the end result. Okay, I just happen to put some nice graphics around it, which state what the settings of the chart are: the COGS cost, the estimated reserves, the discount for the value of oil because it's in the ground, that's 12%. The revenue interest being 49%. Corporate tax being 0 because it's a non-taxable event. The underwriter fee of 10%, and we're using 164,923,363 shares. Okay, in red is where the section of oil price that we're at today. If they sold all this and made a deal today, it's going to be somewhere in this range, $77 to $87.28. It's just doing the raw math, nothing else, no magic there. That's what math does. Okay, here are the references. Where do I come up with these numbers from? Well, I come up with a methodology of linking oil price to land prices in Texas. There's a Texas A&M article that's published. Here's a link. It's basically oil prices lead, land prices follow. This is a really good article. You should read it. I highly recommend it. The COGS cost of oil. That comes from the Wall Street Journal. Okay, and way back around, what was it? This is a 2016 article. It's a barrel breakdown. If we look, U.S. shale and U.S. non-shale are the oil prices that we care about in terms of the cost to produce a barrel of oil. U.S. shale is somewhere around $23.35, and non-shale is around $21 or so. Okay, so we have $21 to $24 in 2016 or so, and I've increased it to $30. Right, the Federal Reserve has said that there's inflation, so I increase the number just due to inflation. If you think it should be more, you can increase it yourself in the spreadsheet. It's not hard to do. So, number of preferred shares. I had a question from someone who asked me that. Where do you get this number? Well, this came from George Palacaris' tweet. And he basically said there's this many shares based on the report they got from their transfer agent regarding a Series A preferred shareholders. And most of it's held in street name. Okay. And let's see what else. So that's the overall references for the various figures we're using. Oh, and the estimates for the barrel of oil. Where do we get that from? There's a Torchlight investor presentation of March 2020, in which on page 10 or slide 10, they talk about the Torchlight energy resources. And over there, if we look at that particular slide, we see that they've got an estimate of anywhere from 2.3 to 5.0 billion barrels of oil, with the middle value being about 3.7 billion barrels. Okay, so we're talking anywhere from 2.3 to 5.0 billion barrels of oil. That's one estimate, but my estimate's actually a little bit lower. It's around 3.2 billion barrels, and that's from the NextBridge Hydrocarbons estimate, right? So NextBridge is an independent company. They had a website that was on for a few seconds that they didn't hide behind a username and password, but they were estimating that in the Oro Grande Basin, in this in this particular project, that there's approximately 3.2 billion barrels of oil. Okay, so that's a little bit lower, and that's the number that I'm using. Okay, so on to some questions. So that's where all the figures come from, and yeah, so that's it for that. Next, we have some questions, right? So I'm gonna use the rest of this slide for Q&A. We've got a lot of common questions, and it's easier just to knock these out, and hopefully everyone could just view these questions and it'll be done with. So, first sets of questions. How is this possible? Does this make any sense? I mean, how can these institutions and professionals whose job it is to make money in the market be missing out on this, right? Let's all have some common sense here. These are non-technical questions at this point. The other thing people will say is, if this is the case, why is the stock price so low? Why hasn't somebody already bought these shares already? Why is it available at this price point? And some other people say, who is this guy? Why does he think he's smarter than all the other people out there? Aren't the guys on Wall Street pretty smart? Shouldn't they know what they're doing? So let me answer this question. So let me take all these questions, group them together, and I'll answer them. Okay. First, how's this possible? Does this make any sense? I'm saying that's emotional baggage, FUD. Okay. You're asking how it's possible. Do some research, figure it out. But there's no. Yeah, I don't see the point of that question. Okay. Next set of questions. I'm going to take two at a time now. Okay. How can all the institutions and professionals whose job it is to make money in the stock market be missing out on this, right? And if this is the case, why is the stock price so low? Why hasn't anybody already bought the stock? The answer is that these set of questions come from a belief in a theory called efficient market hypothesis. Okay? Efficient market hypothesis argues that markets are efficient. There's no room to make excess profits by investing, since everything is already fairly and accurately priced. There's no hope in beating the market. The best you can do is match market returns through positive index investing. Okay, this is efficient market hypothesis. And I don't believe in it. A lot of people do. Okay, I personally don't believe in efficient market theory. Okay, there's a lot of cases of people and individuals who've consistently beat the market. And I don't think the markets are that efficient. I think I think in the long term, they'll find value, but in the short term, they're wildly all over the place. Next question. Okay, let's all have some common sense here. Okay, I call this a warm and fuzzy. Okay, common sense. I don't believe in common sense. I only believe in logic, facts, and mathematics. Okay. Common sense, I think, is wrong. Okay, why is common sense wrong? I'll give you some examples. Okay, Hillary's going to win the presidency in 2016 by a landslide. Okay, that's the first thing. The housing market is stable. Prices will never fall. Well, 2008 kind of proved that wrong. Then there was also the question of WMDs in Iraq. It's confirmed by several intelligence agencies. I think that was pretty much wrong. Yeah. Here's some more examples of common sense being wrong, right? Why would anyone pay $10, $100, $1,000, $10,000 for a Bitcoin? It's clearly worth zero, and it'll go to zero, okay? Well, Bitcoin's currently at about $40,000 a Bitcoin, okay? At the time of this video, and it's been higher. It's gone to 70,000, but people were saying this all the way up, and people are still saying Bitcoin's going to go to zero. And people made a similar argument about GameStop, right? They were saying at GameStop at $4, $10, $40. Why are people investing in this? It's clearly going to go bankrupt. This company's a waste, right? But GameStop went to $480 last year, and of course it's about $120 currently, and I personally think it's going to go higher. So there you go. If you were short GameStop at $4, $10, you might have some problems. If you shorted Bitcoin, I feel bad for you, dude. So let's take another look at this question. Okay, this really has this last set I think is really telling. Okay, how can all the institutions and professionals whose job it is to make money in the stock market be missing out on this? Okay, is this guy smarter than everyone else out there? I mean, who does this guy think he is? Right? Well, this is what the Wall Street Journal says. Turns out that they do a test where they take a monkey and they randomly have the monkey throw some darts to pick some stocks, and they compare that monkey's random darts throwing against the top funds in New York. Here's what they said. Here's what this article says. No animals were harmed in this financial experiment, but some human egos might have been bruised. Okay. Burton Malachali famously wrote in, I probably munged the name, A Random Walk Down Wall Street, that a blindfolded monkey throwing darts at a newspaper's financial pages could select a portfolio that would do just as well as one carefully selected by experts. Well, a year ago, journalists at Heard on the Street decided to see if they could beat the creme de la creme fund managers presenting their stock picks at the annual Sohn conference in New York. The results were brutal. herd columnists, not monkeys, threw darts at the newspaper stock listings, and Mr. Malakli, he would still approve. The columnists' 8 long and 2 short picks beat the pro selections by a stinging 22 percentage points in the year through April 22. Only 4 of the 12 sown picks even outperformed the S&P 500. So that's pretty good. That gives you an indication of how good Wall Street pros are. Okay, you probably know this, otherwise you wouldn't be watching this video. Here's an example of some Wall Street pros. This guy's Carousel Capital, and his success rate in articles is 45%, and his average return rate is negative 17.3. Wow. But he's probably not to be held to blame too much, because the hedge funder was found in hot water. He got arrested for DUI and cocaine charges in the Hamptons. He probably shouldn't be, held accountable for how badly his fund did, because, he was under the influence. It's not his fault. I mean, if he wasn't partying, he could have done better. There you go. That's my take on it. One last question, though. This is actually a really, really good question. Okay. Who would buy oil lands at these insanely high oil prices? Okay. What potential customer would actually buy this from Meta Materials and Torchlight Energy, right? I mean, if you're smart, wouldn't you try to wait for oil prices to drop before you buy? It's a really good question. It's a really good question. Unfortunately, the answer is counterintuitive, but it is pretty simple. So there's a simple answer. It's counterintuitive. People who are making lots of money from oil prices being high, they're the guys who want to buy oil lands. Okay, they're the guys who can, and a lot of the times they're usually businesses. Business, when you're a business, it's about risk reduction. It's not about price per se, right? You want to make money, but it's about knowing what the price is and, guaranteeing that income. So when you're making a large purchase and you're a public company, you're probably not even going to use money. Okay, you're probably going to use your own company stock. You're going to do a stock swap deal. Okay, so the price of the oil is high, but the value of your stock, because you're an oil company, that's probably also high. Okay, that's typically how these things would go. Now, interestingly enough, these deals really usually happen when oil prices are high. They don't happen when oil prices are cheap, because sellers don't want to sell and buyers aren't sure if the price is going to go cheaper in the future, right? You're an oil company. If you're not making much money and you're thinking the price of oil might go cheaper, you want to save your money. You're not going to go out and buy oil lands. Okay, that's typically what's going to happen. So it may be counterintuitive, but that's basically what's happening. So let me do a quick shout out. I want to thank all the people who asked questions in the last week, because this is where the content for these videos came from. I especially want to do a big shout out to Roller Pigeons, right? She came up with a methodology in her video. She said, "Hey, look, forget about the price of the oil land." Previously, everyone, because that's what everyone else actually says, right? They bought, several 100,000 acres at this many thousands of dollars per acre for this much, for this big of a deal, right? Right. Well, it really has nothing to do with the dollars, with the number of acres. It has to do with the number of oil. I mean, it has to do with how much oil is in the ground, right? And the oil price. That's what really matters. And she came up with this methodology, so big shout out to her. Here's a link to her video. Check it out. And that's it. That's this weekend update. I hope you found it entertaining or educational, either way. And let me end by saying that I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. And I hope you were entertained. Goodbye.